It's a positive start. There's been a recovery from the opening lows that the Asian markets had made.
25,083 is yesterday's low. That number should be the first line of support.
Quality name from South India, lot of headwinds, but if this price hike sustains, then maybe that's a stock that we should be focusing on.
Heavy Industries Ministry had received total 7 bids. Of that, Reliance has emerged as the successful bidder.
On AU Small Finance Bank, they have given a buy recommendation.
25,253, that's about 0.2% higher.
Clearly, the net flows still remain fairly strong. The SIP flows are strong.
By 2028, this market is expected to be roughly a $35 billion market.
They're saying that, it's spearheading a rapid retail consumer transformation.
Coming up for the next 6 to 9 months, we should have a very strong wedding season, so that should drive strong growth.
The Nifty and the Sensex have now dipped into the red.
Investment has grown at 7.5%.
Our focus is on profitable growth.
Other session, we're actually seeing the broader end of the market is doing very well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it has been a quiet day on the frontline indices. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Rima here, and Nigel is joining us from the newsroom floor. Guys, hi. Good afternoon.
Hi, good afternoon, everyone. I guess we're seeing a little more red than what we've seen throughout the course of the day, because at least at the headline index level, we were around the flat line, but now there's a bit of a dip coming in. But then midcaps have had a better run as usual.
The Midcap index is virtually at the day's high, and the small cap index is a gain of nearly 1%. So that market is strong. And individual stocks, right? Ola Electric, Zomato, and now even Easy Trip. Interesting news. The company wants to get into manufacturing electric buses. So they are going to be incorporating a wholly owned subsidiary for that.
That's Ola, right?
Easy Trip.
We have to check this again, because even I was wondering.
I checked it planners. Yeah, Easy Trip planners. The equivalent of Make My Trip, etc. The company,
so
which
the
is
exchange notification says they are setting up
yes.
Bus manufacturing, EV bus manufacturing.
So if you want me to read out the exact lines that's come, incorporation of a wholly owned subsidiary of the company for the purpose of electric bus manufacturing, subject to necessary approvals from the MCA.
What we'll do is we'll try and, we didn't pay attention to the markets paid attention, right?
Yeah.
I mean, look at the stock price go.
But Prashant, doesn't it also tell you about the kind of market we're in?
Yeah.
Back in the so-called good old days, some might frown at this, say, is it business diversification? Usually stocks would fall when news like this would come. Yeah. But this is EV we're talking about.
Absolutely. We should dial Prashant Pitti, and we'll ask him what his plans are and what this means, etc. So stocks spiking as we speak, right? So more on this as we go along. So markets, just a quick word, absolutely flat, not flat now, slightly lower. 50 points is what that amounts to. Nifty Bank. So at no point did the Bank Nifty come anywhere close to either breaking supports or, looking at taking out any sort of resistances or targets, etc. So it's been that kind of a day. Small cap index is up 1%. Market breadth as a result is positive. So 1% of the small cap index. And if you want to look at sectors, real estate as a space is seeing a bit of pressure. Names like Prestige, etc. We'll talk more about this. In the CPSE space, I think for the second day running is seeing some pressure today as well. So a lot of those shipbuilders which saw rallies yesterday, they're getting sold into. And as I said this morning as well, no big moves really across global markets ahead of that big jobs data, which is of course around US market opening time tomorrow. So that's it just assumes more importance. I mean, it's just one of those data points, but more important because of what it was. It really shook things up early August, right, when we got the last number. So this number is important ahead of the Fed decision, the Fed meeting in September as well. So that's a big one, but that is only tomorrow. But in terms of individual stocks, there is enough and more. Rima.
Well, you've got Premier Energies, the recent listing. I think they won an order too today. So that stock has spiked up another 15%. And when it listed, it had debuted with the stock doubling. Easy Trip, which we spoke about, is now up nearly 9%. Zomato on the back of the JP Morgan note, overweight rating and target price set at 340. Stock is surging. GMR Airports, JM Financial, a couple of the other big movers. And Ola Electric has been quite smart too. And talking about those PSUs, the Nifty CPSE index has now declined for the 4th day in a row. So the slide continues there, profit booking, you should say. And for this week, the Nifty CPSE index is down more than 3%.
Absolutely. I mean, it's been a great day for Midcaps. There's no taking away from that. The index is still managing a 0.5% up move, and the advanced decline ratio is just absolutely, beautiful, one would say, from a bull's point of view. Got 1,500 stocks advancing, less than 900 stocks declining. So that's been the steady picture. Vodafone Idea and Indus Towers, two names from the telecom space, both having a pretty good session. Indus seems to be reacting well to a couple of the foreign broker notes that came in today as well. So that's working in its favor. Along with Zomato, Restaurant Brands Asia having another good session, 4.5%. On the upside, plenty of movers and shakers. Premier Energies, by the way, the recent listing. Look at the stock go 15%. I think it's breached its listing day high as well. No, actually, it's just about 2% away from that all-time high. So almost at the listing day high. That's Premier Energies. Stock is really in an upswing. And
Premier Energies, just about 10 minutes back, informed the exchanges that they've received an order from the Uttar Pradesh Department of Agriculture for supply and installation commissioning of more than 8,000 solar water pumping systems. Yeah. So that's an order win which has boosted the stock today.
No, absolutely. I mean, the whole sort of line of business they're in, that has the market extremely excited with the solar cells and modules. As Chola Finance, another reaction to a brokerage note, which we will talk about as we go. But short point is that the mid-cap market is in top form. Nigel.
Well, that's right. And just take a look at PVR. That one, in fact, is doing pretty well in today's trading session as well. You have Shree that had a good amount of collections, and Vijay's that was released today. I know there is.
Oh, Nigel, I think there's a bit of an issue with the audio. We'll just fix that. And then get back to Nigel. By the way, Edelweiss Financial, another good day for that stock, 6% higher. So plenty of action in the broader market today. Let's straight away go to Mitesh then and get some trading calls going for the last hour. Mitesh, good afternoon. Good to have you on. So there's a lot of divergence playing out, right? The action remains in the mid-cap space. Would you have any index trades at all, Nifty, Bank Nifty? And if not index, then let's talk about stocks as well.
So, on the Nifty, I think, there's slight worry. After a good up move from 24,000, the first time that I'm seeing that the hourly indicators have started turning weak. So there's first sign of profit booking happening. And that is why, despite we had a gap up today, we didn't kind of see any follow through and, make any attempt to get past 25, 300, 330 zones. So I think till that is cleared, I would want to avoid the index, maybe buy it at lower levels when you get a good pullback. But on the stock side, I have a buy and a sell. PVR, I think, I think you were also discussing the stock, has had a very good breakout today. So keep the stop below 1555 and look for a target of around 1650, 1670 over here. That does look like starting a new trend, which could eventually see high levels, but we'll start with the first target of around 1650, 1675. And Tata Motors is turning negative. So I have a sell with a very tight stop at 1091 and look for a target around 1040 here.
All right, thanks a lot for that, Mitesh. In fact, on PVR, the feedback is that Street 2, it clocked more than 500 crores of collections. And today, Vijay, the superstar from the south, well, the GOAT has been released and the initial feedback as well out there is quite good. So a couple of sales notes mentioned that both cinema and OTT can coexist. And for the cinema companies, what is good in the near term is there's no elections, no big World Cup event, no big sporting action. So that could be actually a good phase for them. And both these two releases have done quite well. So let's see how GOAT sales as well pick up from here on. But Vijay is the actor of that particular film. Well, let's talk about Zomato surging away in trade. Post a bullish note coming from JP Morgan. Vivek joins us to help us out with a quick analysis on that. Vivek.
Well, that's right. A very interesting note from JP Morgan today on Zomato. They've maintained their overweight stance on the stock. They've raised the target price quite significantly to 340 rupees a share from the 208 that they had earlier. What is it that they're saying? They're saying that the company is now spearheading a rapid retail consumer transformation via its convenience as well as selection-focused quick commerce business with very ambitious rollout plans. Along with that, They know that Zomato is now going deeper across all of the metros, having proven this particular model in the NCR region or the National Capital Region, 50% of GOV as well as store count coming in there. Now, along with that, they believe that the rising scale should help drive its monetization, both from channel margins as well as ad spending. And lastly, when they're talking about Blinkit, they are saying that the license now is there for Blinkit to scale faster than peers and also go ahead and exceed the current targets.
Okay, thank you very much for that. Order wins for PTC Industries and the stock has surged nearly 5%. But another one which is reacting to a brokerage bet, that's AU Small Finance and Chola Investments. These are stocks that Goldman Sachs is looking at. Abhishek joins in for more. Abhishek.
Well, Rima, Goldman Sachs has initiated coverage both on AU Small Finance Bank as well as Chola Mandalam. So to begin with AU Small Finance Bank, they have initiated coverage with a buy recommendation, target price of 831 per share. They say that the bank is ready for the next inning. They have the sector leading EPS growth if you take a look with peer comparison as well. So they forecast an EPS growth of 27% on a CAGR basis over the next 3 years, that is FY24 to 27, wherein they also expect an improvement in the ROA profile of the bank by 14 basis points during the same period. So which will be led by the fact that there will be robust loan growth by commercial retail portfolio, which is about 70% of the AUM as of Q1 FY25, despite normalization that is expected in the credit cycle with respect to NPAs. So AU Small Finance Bank is relatively better placed with respect to buying in this cycle, given the fact that there is improving deposit market share, better asset quality control, as well as operating efficiency that they will gain in the near term owing to the fact that Fincare Small Finance Bank has been merged with the lender. So GS has also initiated coverage on Chola Mandalam investment. The recommendation is a buy with target price of 1,786 per share. They say that, Chola is gaining market share amidst commercial retail upcycle trend that we are seeing. So scaling up the non-vehicle finance businesses should help reduce the cyclicality in their portfolio and improve the visibility with respect to earnings growth along with better return ratios for the entity. So they expect Chola to deliver an EPS CAGR of 33% over the next 3 fiscals with an improving ROA profile. So they expect the ROA or return on asset of Chola to improve by 24 basis points over the next 3 years, with led by the fact that there will be robust loan growth, which will be driven by the market share gain across product segments for Chola Mandalam. Back to you.
Okay, all right, got it. Thank you very much, Abhishek, for the details there. Those notes from Goldman Sachs are really moving those stocks higher today. Well, we have plenty to discuss, so let's welcome in Deven Choksi, MD at DR Choksi FinServe. He's with us on the show now. Deven, great to have you on. Thanks for joining in. I want to start with this exchange announcement that just came on Easy Trip Planners. Now, maybe I'm just too old-fashioned or too naive or maybe not smart enough or cool enough. But, the first instinct I had was that, okay, here is a company which is an aggregator, it has an asset-light model. It doesn't even have a presence in manufacturing, let alone EV manufacturing. But look at the stock. It's, I guess this is not a market where you ask so many questions up front. It just says EV and the market's excited. Your thoughts?
Yes, good afternoon. You said it all, I guess. I think the name EV comes out, name defense comes out, name railway comes out, and I think market gets excited. I think it's a business that one needs to look into. Yes, I think there is a good amount of opportunity going forward for one and everybody, no doubt about this. However, I think the major reality in this particular aspect is that anybody, I think, who has got an experience behind, I think, running the business of this nature, probably, I think they would appreciate that. I think there are more legs to it, I think, than seen by people as a few ones. On one side, you have the ability to scale up the business because the money is available. But on the other side, I think every other aspects of business will have to be looked into. So unable to make any particular comment about this particular news item, but I do believe that serious players like Tata Motors, Ashok Leyland among them are seriously, I think, working on, the product business in the EV space, which is going to be, far more significant, including in the green hydrogen ones. I think it is going to be far more significant going forward. So we stay focused with, those companies where we know that they have the ability to manage this entire delivery at this product time.
Deven, my question actually was more from the point of view of Easy Trip itself. I don't know if you've had a look at the company, if you've had a chance to study it off late, or maybe a word on the promoters, Prashant Piti. Because this sounds quite, I don't know if this was ever mentioned in investor calls earlier, if this was an expected move. But again, if you look at it optically as a layman, it looks like chalk and cheese. I don't see the connect between a travel aggregator website, a travel services business, and manufacturing electric vehicles.
Yeah, so precisely, I think communicated, that part that it requires significant amount of different kind of a mindset and bandwidth to run the electric vehicle and without criticizing the existing business. The existing business, on its standalone basis, definitely, is a business where they know the subject far better. So certainly, if one wants to look into this particular business afresh, one should. But the fact remains that getting into something which probably they are not proven for, one will have to wait and see what exactly is in store. But at this point of time, unable to make any kind of critical comment on this subject.
Okay, but the stock is excited. UPL is also higher in trade on the back of a bullish note from HSBC. In fact, they've written on the entire agri space. Vivek joins in with the details. Vivek.
Well, that's right. HSBC today has written on the entire agri space with special mention on UPL as well as PI Industries. UPL today, of course, doing very well in the session, along with another trigger that the company actually reported to the exchanges yesterday. First, let's have a look at what HSBC has to say. They have a buy call on UPL. They've raised the target price to 680 rupees a share. They're saying that UPL Industries actually has the least exposure as far as the domestic agri business is concerned. They're saying that a sign of a recovery in the global agriculture market is something that is quite positive as far as UPL is concerned. Along with that, the higher area under crop sowing is also a definite positive for the company. And they're saying strong rains are likely to moderate in Q2 for the agriculture players. Along with that, the good monsoon will boost water storage, supporting the second half of FY25 to see strong domestic sales growth. So overall, they are expecting a healthy FY25. Along with that, just to remind our viewers, remember yesterday UPL actually put out a notification to the exchanges saying that yes, as far as the seeds business platform is concerned, which is under a subsidiary known as Advanta, they are looking to monetize that particular subsidiary, and that the monetization might happen via the IPO route. So that'll be something very important to track as far as UPL specifically is concerned.
Thank you very much for that. The stock has actually been inching up after underperforming in the last 6 months. The stock has rallied from levels, 6 months chart, has rallied from levels of about 440, 450, all the way now to 620. So that's about a 38-40% neat increase in the stock price. Devin, UPL?
Well, I think the couple of advantages that I see for them. On one side, the input cost is coming under control in the current environment. Though the complete impact of that input costs are reflected into the balance sheets and the P&L, I would think that it will take at least 1 or 2 quarters till the time you have the inventory situation cleared out. On the other side, definitely, the geography-wise, if you look at it, wherein they are present, I think the agrochemical business per se remains, quite strong. And UPL's own manufacturing setup, wherein they are plugging into the distribution arms of the rest of the countries where they are having the business units by supplying from India the basic and the formulation carried out over there. I think that model probably may restrict part of their profit-making abilities, but at the same time will give them a good amount of protection from the vulnerability of the market situation in different geographies. So I think from that perspective, the strategic move is working well for UPL per se. But between the UPL and PI industry, I think the preference should go towards PI industry, wherein the opportunity-wise, the API segment gives more promises and for the growth purpose. So I think we definitely prefer, the later than the UPL at this point.
All right, Deven, what's your, the evening pastime? Do you like to go and watch a movie at the cinema hall, or what's the preference? Or you'd rather catch something on OTT platform? The reason I'm asking you is because PVR is up close to 3.5%, and after straight 2, which collected, more than 500 crores, you have Vijay, the superstar from South, whose film is released, that's GOAT. And collections are looking stronger there. The street believes that both these two can coexist, OTT as well as cinema. What's your view on PVR? The stock, is up 10% in some 15-16 trading sessions.
Yeah, Nigel, leave aside, the excitement pertaining to the movie release and the collection that they've made. The bigger challenge definitely would remain on 2 counts. On one side, definitely, the good content and the theater business, will definitely show up with that good contents. So the first criteria about, I think, getting the good contents right is definitely required. On the other side, I think the resistance of the consumer to, I think, spend more. So the result of which, I think, the cap is applied naturally. In this situation, I think you are unable to make, I think, a complete visibility about how much, I think, the revenue and the growth would be. But having said that, you are absolutely right that in a given situation, I think you are enjoying both the OTT as well as, I think, the theatrical contents. And in such situation, difficult to make a choice. But at this point of time, I think we feel that I think one should look at entertainment largely from the digital point of view. And that's where I think probably, I think, the digital players under Jio may be slightly, I think, better off at this point of time. But it's not a pure digital business on the entertainment side.
Okay, all right, Deven, we will leave it on that note for this afternoon. Thank you so much for joining in. Really appreciate you giving us your view on all the themes and the issues that we've discussed. We'll take a break on that note, come back on the other side, and Varun Goel of Mirai Asset Investment Managers will join in with a perspective on the market.
Okay, welcome back. You got markets, of course, which are actually a bit more lower, right? 60 points. Was looking a very mild 20-30 point for most of the day. But as we get into the fag end of the trading session now, it's a bit lower. 25,140 is where we are essentially trading at. I mean, you basically want to not break yesterday's low, which is 25.83, because you had a nice sort of bounce from there. Still some distance away, but let's see, 55 points away from yesterday's low with the 60-point cut now. Varun Goel is with us. He's Senior Fund Manager, Equity at Mirai Asset Investment Managers. Varun, good afternoon. Good to have you with us here. Thank you for your time. What's getting you interested in the markets, Varun? What sectors, what themes, and what's keeping you busy?
Good afternoon, Prashant. Thanks for having me on the show. Currently, how we are looking at the markets, we are more positive on secular growth stories like IT, pharma, consumption. These are some of the sectors that we have been adding incremental positions. Chemicals also looks like we are coming out of almost 2 years of poor performance, and it looks like things will get better both from a margin and profitability perspective. So these are some of the sectors that we believe can do better. We are currently a little cautious on cyclical names, especially on the defense, railways, and auto side, where we believe valuations have run up quite a bit, and therefore maintaining a slightly cautious stance on that side.
What do you like in chemicals? How should one best play the chemical recovery?
I think one has to be more selective. I think as far as the agrochemical space is concerned, we are still seeing some challenges, both from an international and a domestic perspective. But I think some specialty chemical companies, you have to go chemistry by chemistry in terms of where the Chinese supply has been easing off, where we are seeing revival of margins. And as such, that is where we are finding some opportunities. I think EV space and battery chemicals as a space should see very, very strong growth for the next 3 to 5 years. And that is definitely looks like something where we can find a few ideas to invest.
Okay. Varun, great to have you on. Where do you stand on the EV debate? And if you like the theme, if you think that it has a lot of potential, then what's the best way to play it? I mean, then you have this one pure play EV player. A lot of the OEMs are scaling up, and now we've just got an announcement from a completely different entity, I mean, Easy Trip Planners, which is not even in the auto space. So a lot of parts to it, but how would you play the EV theme, and do you like it at this point in time?
Well, I think if you look at the broad auto space, there is no doubt that there is going to be disruption. We are going to move from the earlier technology, which is ICE, to EVs, hybrids, maybe who knows what all other powertrains do come along. I think the valuations of the automobile sector has run up very, very dramatically in the last 12 to 18 months. So we'll be a little cautious on the OEM names. I think tractor seems to be one space where things seem to be turning around, and we might see growth getting better, especially in the backdrop of good monsoon. So that is one space that one is a little more positive on. But I think both OEMs and ancillaries, we have seen very, very strong price performance, and therefore, I would be maintaining a cautious and underweight stance at this point of time. I think specific components like battery chemicals was one space where one has to really pick and find opportunities where where there is capital efficiency, where balance sheets are clean, and where managements are doing a good job. But broadly, would be cautious on the automobile space.
Auto, defense, rail, right? I mean, essentially, what you're cautious on right now. Well, again, when we say consumption, Varun, what could you narrow it down a little bit? What kind of names?
Yeah, so I think discretionary consumption as a space continues to do well, while we continue to be on the lookout for recovery as far as the stable space is concerned. But I think some sectors like travel, tourism, we continue to see good traction. I think companies in the hotel space, hospitality segment, even leisure and amusement parks, I think incrementally as purchasing power per capita incomes increase, this is one space that we see better days ahead. Also, I think discretionary consumption related to children, whether it's stationary items, whether it's bags, water bottles, luggage, wherever children have a major say, I think all those categories are seeing very rapid expansion in growth. And that is where we see next 3 to 5 years should see very, very strong and above average earnings growth to play out.
Good idea to bet on kids. Varun, I mean, I can't say no to kids, right? Just a quick word on, you said two things actually. One is you said hotels, hospitality. You own Lemon Tree. Again, I'm not asking for stock advice, but if you can just talk about, I mean, stock's seen a fair bit of damage. It's a very large chain, hotel chain, with I think the second or the third largest number of keys across the hospitality, the hotel space. Any thoughts at all?
So unfortunately, Prashant, I won't be able to comment on stock-specific basis, but I think broadly, as I was saying, we believe that tourism and hospitality will remain a large space. I know we have seen historically from the Asian example, as per capita incomes increase from $2,500 to $5,000, there is a significant increase in spends on these items, and we would be constructive on the space.
And amusement, you said amusement parks as well, right? So there aren't that many out there, but you think it's a good business?
Yeah, absolutely. I think so today, if you see an average family of 4 can spend 8 to 10,000 rupees on a single day's outing. Now, as per capita incomes increase, there are a lot more Indian families which will be able to spend that kind of money. So broadly, I think whether it's resorts, hotels, or eating out, and some of these amusement activities will definitely see much more traction, much larger pots of money being invested in this space, and we would remain largely positive on that side.
Hi Varun, good afternoon. Good to see you, Win. What are you making of the cement universe? It's been a horrid time in terms of pricing, but now it seems the industry, they have come together. They are like, let's fight back on the pricing front, and input costs have been cooling off as well. So in the last, I think, 2 or 3 trading sessions, the street is taking note of this. Otherwise, you get a price increase which gets sold into. Now we are in the monsoon and prices are not correcting. How are y'all approaching that? Will you all go with the large cap names, or will you all go with the smaller names like in Orient, Nuvoco, that could possibly be taken over?
I think broadly, if you look at the cement space, we have seen very difficult times from a pricing perspective. I think next 2 years, we are going to see significant amount of supply coming in. And I think the industry as a whole has been trying to increase prices, but finding it difficult to do that in the short to medium term. The sense is that once the monsoons are over, Q3, Q4 are supposed to be strong quarters. There is a lot of money which is going into capex, and the private capex, which is the residential housing, seems to be doing well. So one hopes that the demand should come back in the 3rd and the 4th quarter onwards, and hopefully next year, FY26, we should see cement companies doing quite well from a profitability perspective.
Varun, what are your thoughts on the housing finance segment? You've got the more expensive ticket size companies like an LIC, Canfin, PNB, and then you've got affordable housing companies like Aadhar, Aavas, Aptus, Home First Finance. But all of them have had a very good asset quality. It's not exceeded, 1.5% or 2% in terms of gross NPAs, and growth has been fairly strong. And now you've got big boy Bajaj Housing Finance opening up for subscription, next week. So do you like the housing finance companies? If yes, which segment would you play?
Yeah, I think broadly we remain quite constructive on the residential real estate upcycle. I think we are still in the middle of the cycle, and we expect this cycle to have more legs. At least next 2 to 3 years should be quite strong. So from that perspective, all companies or players in that space, whether it's builders, whether it's building material companies and housing finance companies, all of them should benefit from a very robust demand. I think if we look at the sector, we are seeing 13 to 15% kind of a credit growth, which looks quite strong, and we believe this can sustain going forward. Of course, valuations in some pockets have run up quite a bit, so we would be a little careful in terms of some of the smaller housing finance companies. But I think largely from a medium to long-term perspective, this remains an attractive sector to invest in.
Talking about discretionary spending, what about beauty and personal care? So yesterday, Nykaa had that beauty summit, and they spoke about the Indian beauty market hitting $34 billion of size by 2028. So the opportunity is massive. And we were talking to a few analysts, and they're saying discounting has come down. One of its competitors, which the street was fearing will eat into, say, a company like Nykaa, hasn't scaled up to that extent. So, do you think this beauty personal care category is going to, is attractive as an opportunity?
Well, I think overall, like I said, all discretionary consumption items, especially those items which become more affordable as incomes increase, definitely should do well. I think as a category, definitely there are, this category should also do well. Now, what is the best way to play this? That's something one has to really pick and choose. But broadly, yes, the category should do well from a medium-term perspective.
All right, Varun, we leave it there. Thank you very much for your time. It's a pleasure having you here on CNBC-TV18. Thank you for being here. We'll take a quick commercial break here. It's 3 o'clock, a little past 3 o'clock. Market still holding with about a 60-odd point cut right now. We take a break. We're back. What's happening in dealing rooms? Nimesh is going to be with us. and he'll tell us what's going on and what he's picking up. Stay tuned, that's coming up.
Welcome back. Take note of the Nifty. It's moved to the low point of the day. We're down close to around 65 points, but certain stocks are doing very, very well in today's trading session. Premier Energies, they won that order, the recently listed company, I think 200 crore order. Or the stock is locked now. 20% circuit. It listed at double, and from there it's put on even more weight. The other one I'm looking at is JTL Industries, one of those big underperformers. From December onwards, the stock actually is still lower. But in the last couple of months or so, it's been pulling back from the lows. So that stock as well comes up for you on the screen. Volume spike on that one as well. But a good time to get in. Nimesh, tell us, what are you picking up in terms of today's trading action? We're down, but flows I think are okay.
Yeah, flows are quite okay. In fact, there is a basket buying, which I understand in the last 30 minutes of trade. And that basket buying has a lot of banking names. So for a change, there is delivery-based buying in private bank stocks from a flow perspective. Overall, while the Nifty is consolidating, there is a lot of interest in the broader market stocks. A lot of stocks in the mid and small cap are buzzing in trade, and in large volumes as well. That suggests that there is participation in the broader markets from not only institutions but from the retail and HN investors as well. So that's a broad feedback. The other sector which has done well for the last couple of days is cement. Yeah. We've seen a bit of traction in a lot of the cement stocks. The volumes are on the higher side, and there is a bit of retail institutional participation as well, is what I understand in some of the select stocks. So it looks like that could be more part of a sector rotation from large institutions. But today, while the Nifty is down, there is flow, at least in the last half an hour, and there is a lot of buying in the private bank stocks from larger institutions today.
Well, that's right. On cement, the hope is that these price increases, even if they don't get absorbed totally, it'll at least stop the erosion of prices, which we have been seeing the last 8 to 9 months or so. And input costs are cooling off, so hopefully second half of the year is much better, though quarter 2 will be a washout. Yeah. What about individual stocks? What are you picking up?
Right, so in terms of individual names, the first stock is GMR Airports. There is a large block, nearly 1% equity, 6 crore shares got changed hands. And I understand the US-based fund was a buyer into this block deal. So Again, disclosures will be quite interesting in GMR Airport. So that's the first name. The second stock is Bosch. Again, a big move in that stock, up 4% and large volumes as well. There are very strong buy flows, is what I understand at FI desk. But also there is a buzz of some corporate development, largely on the lines of consolidating their unlisted companies with the listed companies. So that's the trigger as far as Bosch is concerned. The third stock is Minda Corp. Big move in that name in the last couple of days. Even today, the volumes are on the higher side. Again, for Minda Corp, there is a very strong buzz that the company is likely to acquire a company to foray into the EV space. So that's something to track in Minda Corp. And the last is Gujarat Fluorochem. Again, a big move in that name, up 10% last I checked, large volumes as well. I understand some HN investors are quite active buyers as well. And even in Gujarat Fluorochem, the sense is that maybe the company is likely to raise fund in the subsidiary chemical, battery chemical business. And that could be a bit of a value locking. So that's the reason why even Gujarat Fluor is buzzing in trade today.
Battery. Battery is the name of the game, right? Nimesh, on GMR Airports, large US base is certain Florida-based fund manager?
So Prashant, if you look at the last track records, GQG has been a buyer in GMR Airports. We don't have a confirmation yet on the exact name, but looks like that particular entity could be a large buyer in today's block deal.
All right. Well, we'll keep a track once the disclosures come. But thank you very much, Nimesh, for that. Well, let's get in Mitesh, who's joining us with what to buy or sell today for a reverse trade tomorrow. Mitesh, good afternoon. What do you have?
So, Prashant, I think I was highlighting that there could be some profit booking given the fact that the indicators on the hourly and 2-hourly charts have started contracting. I think that could be the situation for the next couple of days. I think we might do a range of 25,300 on the upside to about 24,980, 25,000 on the downside. And the index might not do much, so we'll be trading on a stock-specific basis. I have one STBT, that's Tata Power, which I would recommend selling with a stop at about 424.5 and look for a target of roughly around 413, 412 on the downside. And a BTST on Ashok Leyland. Apollo Tires, which I would recommend taking a BTST with a stop below 508.5 for targets of 519, 520.
Mitesh, before we let you go, thanks for that. Before we let you go, just want to discuss this volatility on RIL that we're suddenly seeing. Let's pull up the intraday chart because in the last, I think, 10 minutes or so, suddenly there's been a big decline on the stock. It's down about 1.5% thereabouts now. Yeah, that's the selling that we're talking about just in the last 10 minutes or so. Mitesh, levels to watch, Reliance, and if you have a trade on either side, long, short?
So Reliance, despite the fact that there was this possibility of this bonus thing and all, I think the overall pattern is very flat, and I think the stock will find it very difficult to get past 3090, 3100 on the upside, and on the downside 2950. So I think it might just be heading towards the lower end of the range. I don't see a big directional move happening in Reliance in the near term.
Okay, all right, got it, Mitesh. Thank you very much. You enjoy the rest of your afternoon. We'll connect again tomorrow morning. Right now, let's look at the top Nifty gainer today. We're just discussing Reliance, which is one of the big losers right now. The other side of the index is actually Titan, because Titan's bright and sparkly with almost a 3% up move. We have Sudarshan with some perspective on it. Sudarshan, what seems to be driving this today?
So before I talk about the Titan, Reliance Industries board has just approved bonus issue in the ratio of 1:1. So now coming to the Titan, it's the top Nifty gainer. The stock is up 3%, and in the process, stock has hit 5-month high. And for this week also, it's up 5%. So recently, when a company had released quarterly update on July 5th, that was Friday. So on 8th of July, when market had opened, stock had hit lowest level since October 2023, and that lowest level was 3126. And from there, the stock is up 20%. At the same time, if you want to correlate with international gold price, gold is up 6%. So gold is up 6%, and Titan stock has increased 20%. So what has been the recent triggers? First, in the budget, we saw custom duty was cut on gold imports. Second, international gold remains steady around $2,500 per ounce. And third, festive and wedding seasons. And fourth is prospect of Fed rate cut. Even brokerages are largely positive. So one of them is Macquarie. It has an outperform call. Target is rupees 4,100 per share. And after Q1 earnings, even management's commentary was largely positive. Company had said it's seeing a lot of traction coming for gold jewelry. It's seeing encouraging sign for remainder of the year, and it sees healthy double-digit growth in sales. And second, also talking about the competition, it says it's going through a temporary phase of intense competition. So overall, it has been a positive going for Titan.
Thank you very much for that. The Reliance board has approved the bonus issue in the ratio of 1:1. Remember, this was announced just before the AGM that the board will meet on the 5th of September, where they will consider this 1:1 bonus issue. So it was priced in, so perhaps a little bit of sell-in news, because on the day when the company had announced that the board will meet to deliberate on this, the stock had seen a bit of a rally. So that's Reliance Industries and the latest there. IT stocks are seeing some buying now. So the Nifty IT index is now up close to about 200 points. At one point of time, the Nifty IT index was down nearly 200 points. So look at the reversal that you're seeing in the Nifty IT index and individual names. The Infosys is now back in the green. That's got a gain of about 0.6%. Wipro's leading with more than a 1% rally. TCS is now back in the green. So IT stocks are now in favor. Amrish Baliga is now with us, joining us on the show. Amrish, afternoon, and thank you very much for joining in. City Union Bank is the stock that you're recommending today. Why is that?
Good afternoon, Rima. See, City Union Bank is one of the oldest private sector banks with about 800 branches. It's mostly South India, where we have about 692 branches. And within that, Tamil Nadu itself has about 524. So it's very much South-centric. They lend mainly to traders and MSME. Although currently the new focus area has been also retail, housing, and gold loans. About 38% of the loan book is MSME. And they have a strong capital adequacy ratio of about 23.8. Corporate governance standards are decently high. We have seen consistent and continuity of management, which is their hallmark. If you see the last 100 years, in fact, the bank has been there for 118 years, but for the last 100 years, they've had only 7 CEOs. And the current CEO, Mr. Kamkodi, is retiring in 2026. Another unique thing about this bank is that in the last 118 years, they have paid uninterrupted dividends, which I think is a record. FY26, I'm expecting the growth to be about 15 to 16% and NIMs to be around 4%. So my target price here is about 210 at about 1.5x adjusted book value for FY26.
Okay. Stay on, Amrish. We need to slip into a very short break. But before that, Ola Electric's Bhavish Agarwal, we chatted with him earlier about the August sales numbers and how the market share for the company has come down. The chat went on to talk about how the company is very close to break even at the EBITDA level. Their focus is on profitable growth. So listen in to that conversation. We'll slip into a break and come back.
We've also dipped a little, but year on year, actually, we have one of the highest growths in August. And the fundamentals of our growth story remain the same. We are focused on profitable growth. We, as you saw in our quarterly results, we actually are EBITDA break-even, pretty much there in our EV business. So our focus is on profitable growth. You will see us continue to bring new products, expand distribution, and continue to focus on vertical integration to bring better technology and control cost. The challenge for incumbents at a macro level is, वो खेलेंगे तो पछताएंगे, नहीं खेलेंगे तो पछताएंगे. खेलेंगे तो पैसा लूज करेंगे और अपने खुद का ICE business cannibalize करेंगे. You can see all of these companies, the incumbents who have started playing in electric are losing ICE market share to their ICE competitors. Every three-wheeler driver works on my Ola Caps platform, every one of them, right? So I know their pain points. I know their propensity for electrification. I know the GTM, go-to-market, distribution, financing, everything we have very deep, entrenched experience in as a group. And three-wheeler has always been on our radar from the beginning of Ola Electric. We've also showcased some technology focus on this. And our entire manufacturing technology strength that we've built in two-wheelers is going to be easily transferable to three-wheelers as and when we choose to bring out our products.